Hey everyone, welcome back to the channel. This is the second video in the four-part series we're doing this week on Procter & Gamble. In the first video, we covered a short company overview and calculating their WACC, which came out to be about 4.2%. So now we're going to jump over into their financials and take a look at revenue. So the first thing we have here is their income statements. And we can see that they've had a slow, steady top-line growth going from about 65 billion up to 71 billion from 2016 to 2020. So we're going to try to make sure that overall growth kind of stays similar and in line with this. So if we move down a bit, this is actually a schedule from their 10K, and it's showing the percent of revenue by subsegment for 2016 through 2020. So I had to go back through multiple 10Ks to pull this together. But we're going to make sure our assumptions are still similarly in line with this as we kind of calculate going forward, so we can see if the total revenue for that subsegment as total revenue doesn't have any crazy growth or decline. And now moving down below this, we actually calculate the revenue by subsegment. And this is calculated by taking those percentages right above. So if we take this 22% and we multiply it by their total revenue, that'll get you this 14.37. And what you'll see here is off to the right, I've actually added in two columns, 2020 market share. So this comes from their 10K, and this is the market share they hold in that category, or at least that they report that they hold. And then with a little bit of Googling, I pulled together the expected market growth. So overall, the CPG market is expected to grow at about 3.15%, and then you can see these subcategories. And now this data comes from a lot of different sources. I didn't cite it, it's not perfect, but I think it's a good ballpark. And if you do some quick Google searches, you'd find very similar numbers. And I think a few things that we want to notice here is if we look at baby care, the market's expected to grow 6.2% and they control 25% of the market. But if we actually look at how they've been performing, they've been losing market share every year. It looks like they've been decreasing in sales. So that's something we're going to want to keep in mind. But generally what we're going to do, if they hold a large market share greater than 20% and they've had pretty decent growth, then we'll probably assume that they're going to have similar growth that they have in the past and that they're kind of maintaining their market share. Another one to note is if we look at home care, we'll see their home care, they experienced a really large growth in 2020. Now, I expect this to actually drop back down, kind of probably closer to what the market is expected at. And if we look at here, that's about 5%. The reason I say that is during COVID, a lot of people were hoarding and buying supplies. So I think they definitely benefited from that aspect. And another interesting one to look at is if we look at their hair care business, it declined 6% in 2020. And once again, if we look at the overall hair care market, it's expected to grow 3.3%. I think the decline here again is just COVID, right? We were all sitting at home. We weren't styling our hair. We weren't going out. So you're selling less hair care products. And then another interesting one really is shave care. So you could see it grew pretty well in 2017, declined in 18, about steady in 19, and then declined in 20. I actually think that this is going to continue to decrease. The reason I say that is there's been a lot of pressure in this market in the last decade. You had launching of brands like Dollar Shave Club and Harry's, which have both been acquired by Unilever and Schwick, I believe, were the two companies that acquired those. So I think that P&G really missed the boat on this aspect. I still think they have a great brand in Gillette, but from a pricing perspective, I don't think they really compete. I switched to Harry's a couple years ago because it was 6 razors for $15 instead of 6 razors for $40. So I think that this is a spot where they've kind of lost the edge, but I'll model that in, but we'll see if that continues or not. So now let's drop down to these assumptions and I'll walk you through kind of what I've done here. And so these market growth rates are really the next 5-year CAGRs based off what I could find online. Now, obviously, I think the thing to keep in mind here is we don't want to be growing faster than the market CAGR. Obviously, I think that these are still estimates and projections and who knows how accurate they are. So what I've done here is if we've seen historical growth rates, I've kind of tied back to those instead of necessarily the market growth rate. And then after 5 years, so if we look at 2026 and forward, I've actually decreased all of these growth rates by either 0.5% or 0.25% for the most part. And the reason being here is in 5 years time, right, these markets will be so much larger. My anticipation is really at that point, what happens is, the market kind of starts to grow slower because it's just a more mature market. And you know what I mean? There's less innovation, less new products, things of that nature, and it's just going to kind of continue to grow at a slow, steady pace. So fabric care, you can see we have it growing 4.8%, just kind of tied it back to 2020 for the next 5 years and then decreasing slightly after. For baby care, I have them still decreasing, but I have it improving every year. I think they're going to focus here and try to turn it around. This is one of the higher growth markets. So kind of have them focus on it and then turn it around and then slowly grow it at about 1% a year and still not quite hitting that expected market growth of 6.2, but starting to catch back up to the competition. Home care, right? This has been kind of all over the place. I think 2021 could actually be kind of disastrous because a lot of people bought a lot of supplies, but I've tied them back to just what I found is the 5-year growth rate and the declining thereafter just as the market matures. Skin and personal care, I think that this is actually a big growing area, and I think, expected to grow 5.24%. So I've held them at that. They've had good growth the last couple of years, so I think, they continue to grow at that rate and then just decline as the market matures. Hair care, I have them bouncing back to the market average. I think that this was a one-off for COVID, as I mentioned. Family care, tied it out to the expected growth rate I found. Oral care, I think the last couple of years they weren't growing as well. So I kind of took like a blended average of the last 3 years really to get that 2.8%, a little bit lower than just the expected market growth. If we look at shave care, right, similar to what I did for baby care, I'm expecting them to decline 1% a year and then kind of slowly catch back up to the market average, but definitely losing market share in the process there, unless if they can really turn around and change what they're doing. Feminine care, this has been an interesting one. They've grown at about 3% the last 3 years, so I'm kind of holding it flat there. And then personal care, I think that this is an interesting one and probably where they have the most potential. Obviously, 2019 didn't see great results, but 2020, 31% growth, I think was actually pretty impressive, even with the pandemic. But so I have them growing at the market CAGR for the next 5 years, which was 7.9% that I could find. And, I think the big thing to baseline here, all other I've zeroed out. I'm not going to try to predict how this grows, but just kind of leave it steady. But overall, we can see, right, we have them growing about 3% and then slowly increasing as they kind of fix these other businesses that have been declining. So that's the idea here is they kind of get back up. And then come 2026, as the market kind of matures, it slowly kind of goes back down. But really, if we look at the total CPG CAGR that I could find was 3.15%, and they really are just a CPG company, right? So I have them growing a little less than that in 2021 just due to losing market share and shave and baby, right? But then slowly kind of ramping back up and taking some market share as their other businesses continue to perform at the market growth, and then they turn these ones around, right? And then kind of reverting back down. And after, I would just say 2026 through 2030, the CAGR would probably drop as well. So I think it's a pretty fair and reasonable low single digit growth assumption. I think you could go really into one of these categories and try to refine it, but ultimately what this has us going from is $71 billion in sales of 2020 up to 97 billion. So pretty good growth over the next 10 years for a company this size and this mature with these kind of brands. So that'll do it for the revenue assumptions. In the next video, we're going to go ahead and look at margins and see if there's any kind of trends there that we can pull out. But I think the big thing to focus on here will just be their R&D costs and their advertising costs, basically to maintain market share. How much have they historically had to spend on advertising? And that's probably going to have to stay pretty steady. And we'll try to see if we can back into if there's any shift in, as we look at kind of the total sales, right? Going from 22% to 24% of fabric care, are the margins impacted at all? I don't know if we quite have that data or if we're going to be able to extrapolate it out of the 10K, but we're going to give it our best shot. So thanks for tuning in. Let me know if you have any questions or comments, and we'll get back to you. Thanks.